This is the one video that you need in order to master top-down analysis, one of the most important processes in order to become a profitable trader. Most traders overcomplicate this process, but complexity is not what has gotten me results like these. And I'm about to help you simplify top-down analysis so much that even a beginner will be able to follow along. And the best part, this is repeatable every single day. Not only that, I will also show you how you and me can go from this top-down analysis to consistent executions, so I am able to make you a profitable trader today. So top-down analysis is divided into three things that are incredibly important. And the third one is what is simplifying this the most. So first, it's the levels. What levels are we going to be looking at? We are going to be looking at order blocks, and we are going to be looking at fair value gaps. For traders who don't know, order blocks are simply as we are on a move up, on a bullish trend. All of these pullbacks are creating so-called order blocks. Counter trend moves in a trend are order blocks. An example of bullish order blocks is on this bullish trend, we have multiple counter trend moves, and these are our order blocks. So we have an order block where the market reacts from. We have another order block that the market doesn't go to. We have another order block that the market reacts from, another order block that the market reacts from, and we have very recently also an order block. And then we have fair value gaps. Fair value gaps, for traders who don't know, when we have a very impulsive move, usually the market creates what we call inefficiencies, where not every single trader was filled where they wanted to be filled, and that creates a gap in fair value. So if we quickly go back to the same price action, a 3-bar pattern like these 3 bars that leave this gap right here, this is what we call the fair value gap, and as you can see, this is where the market reacted from and eventually moved to the upside. But as we are on our move lower, the market keeps reacting from the fair value gaps and giving us strong reactions. So both fair value gaps and order blocks are extremely important. So those are the levels that we are going to be looking for. But in what time frames, you might ask? Well, we are going to be using our third concept in every single one of these time frames. So we have the daily time frame, the 4-hour time frame, the 1-hour time frame, and the 15-minute time frame. Now, don't worry, because the third concept is going to simplify everything, and I'm going to show you exactly how we do it. So this is the weekly chart. I wanted the weekly chart just to show you a little bit less information, so we don't complicate. But if we go onto the daily chart, we can see a way larger amount of order blocks and fair value gaps, all of them playing out. And this is going to be very important because we are going to be using the daily, the 4-hour, in which we can see multiple order blocks, the 1-hour, and the 15-minute. Now, some traders might ask, why not use the 5-minute and the 1-minute too? And the reason why is because 5-minute and 1-minute are usually time frames of execution, and you want your execution to be in line with your other time frames. And so the reason why we will not be using the 5-minute and the 1-minute, it's because it's way harder to forecast the 5-minute and the 1-minute, because when we go on the lower time frame, let's say that we clearly forecast that the market is going to go towards this low. If you go onto the 1-minute chart, you don't know how this is going to deliver towards the downside. So it's better for us to stay on the 15-minute, identify the levels. And I know I'm getting a little bit ahead of myself, but if we identify the levels, we will then be able to trade the market from those levels. But before we get ahead of ourselves, let me share the third concept that has completely simplified top-down analysis for me. And that is the questions that we are going to ask. So the questions are going to be simply, where will we go first? Where will we go after? Because you see, even though the market is consistently moving to the upside, you can see that we have multiple pullbacks. And that is because the market always goes from bullish levels to bearish levels, to bullish levels, to bearish levels. So we are always in a cycle between bull and bear. So the market moves higher, lower, higher, lower, higher, lower, higher, lower, higher, and then, which means this gives us the power to ask, where will we go first? Well, we've just hit a bearish target, a high. So now we are going to go into a bullish level, which is the order block. And then we are going to target a bearish level, which is going to be the high. And then we are going to target a bullish level, which is going to be the order block or the fair value gap. So now that we have the three components, the levels that we are going to be looking at, the time frames in which we are going to be looking at this in, and the questions that we will be asking ourselves, it's time to put this into practice. So we start off on the daily chart. On the daily chart, we can see that the market is already at a very strong bullish fair value gap. But this fair value gap has now been disrespected because, as you can see, this candle closed below the fair value gap. So that means that this is now a disrespected fair value gap. But we also have a bullish order block right here. This move to the downside is the bullish order block. If we go onto the 4-hour chart, then we can see something very, very clear. And that is that if we mark out the most recent fair value gaps and order blocks of the 4-hour, we can see that all of the bullish ones are being disrespected and all of the bearish ones are being respected. You can see bearish order block. So these three candles, this bullish push on a bearish trend is the bullish order block. Same thing here and same thing here if we close below. So this gives us a strong indication on where the market will go soon. And then if we go into the 1-hour chart, we can see the exact same thing. All of the bullish pushes are creating these bearish order blocks that are giving us the reaction. And so on the 15-minute, we also have a very strong bearish fair value gap and all of the bearish levels are being respected. And so with top-down analysis, you have to ask yourself, where will we go first and where will we go after? And the way you arrive at these answers is by asking what levels are being respected. Is it bullish or is it bearish? And we've noticed that bearish levels are being very strongly respected. And so therefore, you would expect the market to go where? Well, you would expect the market to go to a bearish level first and then towards a bullish level after. And so we see the delivery towards the downside. But let me show you how to start a day with top-down analysis. So now that we've learned how to do the top-down analysis, let me show you how to go from the top-down analysis into one execution. So right now we start on the daily chart and we mark out all of the levels that the market is reacting from. So we have the sweep of the low, we have the order block that the market is still reacting very well from, and we have just reacted bullish. And so what happens after we tap a bullish level? We go towards a bearish level, which in this case is going to be the high. If we go into the 4-hour chart, notice how we can already start seeing more information. And in this case, we have the fair value gap that is being respected. We have another fair value gap that is being respected. And we have one more order block that is being respected and another order block that has just been created. And so going back to the questions on where will the market go first? Well, first the market has to go towards a bullish level, and then we want the market to go towards a bearish level and the levels that we've already seen on the daily chart. And what is the other question that is extremely important? This is the question that will allow you to become a profitable trader. And that is, what is the market choosing to respect? And you can see that the market is choosing to respect bullish levels. And so therefore, our goal is to enter in longs. On the 1-hour chart, we can see the same thing. If we go to the 15-minute chart, we need to start seeing some bullish price action. So let's go onto the market open, which on NASDAQ happens at 9:30 a.m. New York time, and we ask the same questions. Where will we go first? We are at the very strong order block, and we also have this very big order block that the market is currently in. So we are already at the bullish levels that we want the market to react from, and the market is choosing to respect those bullish levels. And so now we go on the 15-minute chart, we do the same thing, and this doesn't have to take you a long time. All my top-down analysis takes me 5 minutes right before the session, and I make a video of it every single day to share my exact analysis before the market open. No days have been missed. And I do this on my private mentorship, which you can find with a link in the description, but more on that a little bit later. Let me show you how we would execute. So now that we have the market open, I am going towards the 5-minute time frame, and I am looking for the market to hit the higher time frame key level. There you go. We've hit the 1-hour order block. And now I want to see a 5-minute market structure shift, because once I see a 5-minute market structure shift, I have a very strong and high probability trade for me to execute on. Notice how for now the market is still choosing to respect bearish levels on the 5-minute time frame. And once it disrespects these key levels, then we can have an entry with the stops either below the candle body or below the 50% of the wick. I'm going to show you the 50% of the wick just so you know that we don't need very tight stops. This is where you would enter in a buy. You would set your stop loss, which is your maximum loss, below the 50%, and the take profit at a 1 to 2 risk to reward. That means that on this trade, if I profit, I will make 2 times the amount that I am risking. And then if you just let the market play out, you will see that after some time, even on the 5-minute, you can see the market consistently going from bearish to bullish level, bearish to bullish level. This happens in every single time frame. In just about 3 hours, this was a trade that took a little bit longer, but it doesn't matter because it showed the power of the top-down analysis, and you would be able to make $2.2 thousand on this trade. Not too bad. We can't really complain for 3 hours of work. So that is how we do top-down analysis, and that is what I do every single day in my private Discord. So check the second link in the description. If my team doesn't reach out, it's probably because the spots are closed for the mentorship, because we only allow a certain amount of traders in every single month. And why is that? It's because we will guarantee that you will get funded in just 90 days. So if you want more daily guidance from me, then check the mentorship with the second link in the description. Once again, we guarantee that you will get funded in 90 days. And if you want to check out the best futures prop firm, then go check out Funding Ticks and use code Kimmel for up to 50% off. This is the best futures prop firms in terms of quality and price. So check the link in the description, use code Kimmel for up to 50% off. And if you're looking for more guidance from myself on a daily basis, then check out the mentorship with the second link in the description. I hope you all enjoyed, and I'll see you in the next one.